I'm Darren Bott, interior designer and aviation fanatic.
And I'm Sweeney Gray, journalist, and this is the Interior Podcast.
Emphasis on tea, as we spill the tea on all things design, home and construction.
Locally, regionally, and even internationally. So join us as we spill the tea.
Welcome back to another episode of the Interior Podcast. I am Darren Bott.
And I'm Sweeney Gray.
And we are here to continue spilling tea as we move along this interesting journey. Today we have Mr. Damion Sutherland, who is the Executive Credit Manager at Eastern Credit Union. And he is here to, blow our minds, literally.
Exactly, because, when you talk about home construction, or even renovation or anything like that, those things don't come for free. You have to have the finances.
Correct.
How do you get those finances? How do you save? How do you, if you don't have sufficient cash in hand to pay for everything, how do you get additional cash? Should you, what's the difference between paying cash or applying for a loan for these things? So these are all the mysteries that Damion is going to break down for us and make very simple. And I love that we're going to a credit union. There's something very community-based and accessible about it.
Very
so
accessible.
It makes dealing with finance seem a little more approachable and realistic, because financing is also intimidating on many levels. Going to the bank can seem as though I'm not the right fit. I have to wear my Sunday best and make sure that everything is well organized.
I know somebody in the bank.
And I have to, more importantly, I have to know somebody, at least with the credit union. And it's not that I'm going to go in a washika, a rubber thing or whatever. I still want to try and look respectable, but because it's of us and it's more community focused, the regulations, I think, should be more realistic, and I'm less intimidated, and I can have an honest conversation about either the dismal or some state of my finances. So Damion, thank you so much for joining us.
And thank you for having me.
Of course.
So as we introduced you, you are Damion Sutherland. Can you give us a little more about yourself and your background in the finance sector?
All right, so I am the Executive Manager of Credit Administration, Eastern Credit Union. I have been there for approximately 3 years. My background has a bit of banking in it. I've been in the finance realm for roughly 22 years. I've worked at international banks, regional banks, local banks as well. And I'm now here at Eastern Credit Union.
So you're literally the perfect person to talk to, because you've been through this system. You've been through all stages of the financial industry in Trinidad and Tobago.
So I have a good understanding of what the commercial banks ask for, the credit unions, and we now try to get to that point of really understanding the members, what their needs are, to put forward a better solution for both parties.
Nice.
Now, before we go into that, we started and we got a breakdown of who Damion is and his experience, but we didn't even ask Damion what he drinking.
What is your tea today?
All right, I am drinking chai tea, turmeric with almond milk.
All right, sounds fancy.
Why almond milk?
I am allergic to dairy.
I know, right?
I mean, like a lot of us, but we love to just walk on the dangerous plan.
I went through a phase where I thought I was lactose intolerant. Turns out I'm not, thank you Jesus. But I used to real play with it.
I am, but it is what it is.
No, sometimes you had to test the system. You can't baby it,
I've tested it, and it's rough. So I stay on the good side.
All right, I like that.
What are you having, Darren?
I am having a chai tea with, I think, almond milk as well. Well, the same thing that Damion is I'm having, because I'm not.
But you're having turmeric.
Turmeric.
Yes.
Yeah, you're not turmeric. You're probably
I'm just almond.
You're just almond.
A spice.
Yes. Chai latte.
Yes.
I'm having the turmeric chai latte, and I'm having normal milk because I am not lactose intolerant, so I'm fully gassed.
Enjoy it.
Yeah, thank you.
All right, Damion. So we are talking about finance, talking about what people have to look forward to when either approaching an institution or about to take on a renovation or maybe purchase a home. So as a layman, as somebody walking off the street coming into the institution, take us through those steps. Take us to, like, I'm coming to this counter. Sir, I would like to purchase a home. What do I do?
Yeah, actually.
So what we like to do is really get to understand the member, or even if it's just a customer coming in, and we have to go through that process of bringing you into Eastern Credit Union to become a member. But it's really understanding you and understanding your financial position, and not using a broad brush approach and using a one size fits all. Basically, from that point, if you are interested and you come in over the counter, we will engage you with a loans officer who would now walk you through the process to do a completion of a loan application, the PFS, personal financial statement. In the personal financial statement, we really want to get to understand you, what your current situation is, understand what are some of your short, medium, and long-term goals. Because whilst we might be in the realm of home ownership, we really have to take full appreciation of where we are now. What are some of the things that we may have to put in place towards home ownership? And what are some of the other goals that we may want to accomplish as well, just to make sure that we don't just focus on one, we try to focus on all. And really get to that point where we could time speak and really understand where we are positioned right now as in relation to, I'm in my early 20s, that I could probably get a facility that runs 30 years or so with a more manageable payment. I'm in my 30s, 40s, so that now time is really of the essence, and I don't have that length of time to span out a loan mortgage payment, so of course I now have a higher monthly installment. We try to balance it with other needs that you may have. Life happens, we have children, we have other needs, vehicles, other financial needs that may come up. So it's really to get that holistic approach towards to put forward the most appropriate financial solution for you.
So you have just told us your history, right? So you've worked in banks, you've worked in local banks, you've worked in regional banks, you're now at the credit union.
Right.
Who is the oldest, or what's the oldest person you've seen be approved for a mortgage in your long career?
Now it depends. It really depends on the individual, because what they look at is sustainability of the income. So I may have a 50-year-old coming in, and the 50-year-old may be employed in a company that the retirement age is 65. So we could look at the opportunity to explore a 15-year term.
Okay.
Then I may have a 50-year-old coming in, but his retirement age is 60. So what we have to look at is what would be his income stream beyond age 60, because we don't want to put that member or customer in a position where he does not have the capacity to repay the mortgage beyond age 60. So in certain circumstances, you can come in at 50 and apply, but that particular mortgage may be tailored based on your specific situation, whereas somebody else will come in and it's going to be a bit different because your financial position is a bit different in terms of gratuity payments, in terms of what you would have allocated for pension payments, in terms of your savings. What do you have to put forward to assist in terms of, if we are not in a position to finance all, could we finance a portion? Could you facilitate lump sum payments throughout the duration of the loan that would in fact reduce your interest and the term of the facility? So we try to explore a lot of different options to facilitate members.
And in the really realistic but maybe unpleasant scenario where you have to tell this person, listen, these monthly payments really untenable, especially if you're coming as a single person, because I don't know. There are some unicorns in Trinidad and Tobago who've been able to purchase their homes by themselves, but it's really not realistic.
Because like I have heard, let's say someone, let's go to a salary range of about 30,000. You're only able to qualify
The fact
for
that they have a
1.5.
salary range of 30,000, that's a unicorn one time.
There are quite a few of the unicorns working around.
I know.
But like that's
Let them know I'm
$1.5
single.
million for a We caught that. You heard it here, right? Yeah, so like some people 1.5, and if they're looking at something at 1.7, and realistically, $1.5 million is not that much for a house.
And that's what's a one bedroom?
It's a basic. It's the base of construction right now.
That is correct.
Right, and then you have teachers, you have other people who have to now combine income to be able to qualify for something. You can't even say what, but just something. And is it that, can I say that it's a bit unfair or unrealistic, or is it that people would be renting for the rest of their lives? Like what? Because I think that is what a lot of us are seeing now, especially those who can't get the HC homes.
Correct. So we have some individuals who may prefer renting because it's easy. I pay monthly and I don't have all these
extraneous things to deal
Exactly.
with.
chores to deal with. I don't have to cut the grass. I don't have to make sure these things are done. That's the landlord's responsibility. Then we have some people who are really in it because they really don't have a choice.
Right.
What we really try to advise, and the lovely thing about a credit union member, you can become a member at a very young age. So it's not, like the conventional bank where we have to wait until we're age 18 and then we're going to open an account.
Well, how old can you be to join a credit union?
So from a credit union, you can become a member at birth. So so your parents could join you into the credit union.
I feel like I should have known this, but I didn't.
Because I think when we were all younger, we all got an Eastern Credit Union account at school.
Okay.
In primary school, at least.
Correct.
Oh wow.
Yeah. And I think, of course it was a struggle for a lot of us to keep it up. Because when you get older, you start taking out your money to do this, to do that.
Start living life.
Learn to spend. Mommy give me access, so I big enough to have access.
So what we need to do is start working backwards.
Right.
So we start working backwards with the understanding that if I want to purchase a property costing $2 million, or if I probably want to live in the West, then we have to appreciate that the prices in the West are going to be a bit higher.
Correct.
What is the income range I will really need to be at to satisfy the requirements of whichever financial institution I choose? So if I should look at, let's say, a 1.5 million and I have a rough installment, let's say roughly $6,500 a month, I need to probably have an income of roughly between $20,000 to $25,000 to qualify. I now have the opportunity to look at myself and understand that currently if my income is, let's say, 10 or 15, do I have the opportunity to, one, probably get a promotion at work to improve my income earning capacity? Two, probably I need to invest in myself, go back to school, do 1 or 2 courses to probably put myself in a more marketable position to gain additional income. Or 3, we have a lot of individuals who have the little side hustles. How do we formalize a side hustle now so that is really looked upon at any financial institution as a viable means of income and it's sustainable to support a long-term mortgage? So we really want to understand what is required to, for instance, purchasing a home. And there are a lot of expenses associated with purchasing a home that we should really be privy to. We want to understand what is the down payment by the institution. We want to understand what are some of the legal fees that we will have to pay.
Yeah, that legal fee thing is a scene.
Because a lot of us don't know that we have to get lawyers involved.
Yeah, like I would
It's not quite a
assume
lot.
your mortgage is usually how much percent? 10%? You have to have 10%
So there's
down
a standard
payment.
of 10% in the industry.
But ideally it should be bigger. It should be higher.
The more money you have, you can pay. It's
better for
you
you.
in terms of the installment. However, there are other products available to help mitigate the risk. So you may go to a commercial bank and they may speak of mortgage indemnity insurance. So you make a 10% down payment and then they look at mortgage indemnity insurance to buffer based on their policy. So if the policy really speaks to 80-85% financing, but we are now making a 10% injection, they may take out a mortgage indemnity coverage just for that 5% coverage, that period of time, to help mitigate both parties, the risk to both parties. You may come into a credit union and we will say 10%. There may be offers where we may be willing to do 100% financing, which is awesome, and you can come in. We also have the opportunity of looking for an opportunity to finance your legal fees, closing fees, and the closing fees incorporates a lot of the legal fees. Preparation of the deed of conveyance and the deed of mortgage, title searches, all of that. We're looking at insurances. There's homeowners insurance. There may be a life insurance requirement depending on the institution you go into. We want to make sure that we have enough finances allocated to cover all of the expenses associated with purchasing that asset. So you really want to have that holistic conversation and not come in and hear 10% and then it jumps out at you.
Yeah.
That, we falling short on some of the funds required to close this transaction.
So, so if I come in to you and you set out a lot of overwhelming rules there, and like I said earlier, you don't necessarily have the finances to do what you came into us for the loan to do. what is the response from Eastern Credit Union? Do y'all offer financial advisory services to say, hey, you're not where you want to be as yet, and yes, I can do the personal introspection. That's something that you can't do for me. But the technical finances, so like we recommend, an XYZ, and one of the concerns I always have with financial institutions, because I am not numerically inclined, I need advisors who are not just informed but actually willing to have an opinion.
I understand.
And say, listen, I am not going to tell you what to do. Based on XYZ, I'm inclined to think this might be in your best interest, this might be in your best interest, this might not be in your best interest.
Right.
And explain it so that, it's not still me floating, swimming in rough waters. You've kind of smoothed it a little bit. The onus is still on me, so I can't turn around and say, well, my advisor tell me XY. I have to do, but it's still my choice. What is Eastern Credit Union's approach? Because it's overwhelming. Like, you just spoke about closing costs. What?
So what we do at Eastern Credit Union is really understand each member individually.
And that's a massive advantage,
Yes.
because it's you're individualizing the service and
Correct.
the
package is tailored to you.
Yes. So Sweeney's package is not Darren's package.
Exactly. So you come in and you're interested in purchasing a home. First thing, we have that in-depth conversation, which we really want to understand what is your current financial position. So we ask that you be open and honest.
Right.
And we really try to understand where you are currently positioned. We want to understand, not because we want to mind your business, but we really want to understand your income streams, to help get you to where you want to be.
And more importantly, for anybody who's afraid to share that much, you all have confidentiality.
And it's very confidential.
Exactly. So if there's a breach, I can, there are steps that I can take,
At
right?
points you can escalate.
Right.
If you feel that your private information is open to the public.
Right.
But I can assure you it's very confidential.
Good.
Yes.
Good. And I just wanted to make that very clear, because it's easy to say have an open and honest conversation with your financial advisor, but what is the,
Correct.
ramifications if
So you want to
there's a
create
breach?
that atmosphere to really get to the point of having an open, honest conversation as well. We want to get to the point of really understanding, and you remember the individual who's interested, really accepting that where I am. So for instance, this young person, early 20s coming in, may come in and say, I want to save. Okay, no problem. And I'm going to save $500. Now to me, $500 when I'm in my 20s may be a lot of money, $1,000. But now when I match that back to your particular goal, it may not be enough. So it's really to understand and appreciate, if I really want to have my home by 27, 30, $500 may not be enough. I probably need to set aside $700. So now we take a step back. And Darren would have indicated you started young and you save your money, and then you start to live and you spend your money. So you really want to understand what you spend any money on.
And then you're not replenishing that money.
Correct.
For a lot of us.
Exactly.
It's easy to spend, it's not easy to put back.
Not easy to put back,
So you want to take a look at our expenses and understand, are these essentials that we're spending on, or are these things that we're spending on that we don't have to and we can set aside.
So,
Of course, you still want to have fun. I'm so sorry.
Right. So we want to create that balance.
Right.
So it's not about I'm working and I'm saving and I'm only saving towards the house. It's understanding that I'm working, I'm living, life happens. I may meet my significant other before I even purchase my home. But I have to position myself to meet my significant other. She's not going to meet me, or he's not going to meet me if I am going, it's robotic and I'm going from home to work and home to home and not spending any money.
Thank you.
Correct. So we want
some of us live that kind of life, but it's not the best. But so I can say, safely say that, like the advisors, you will put us on a financial diet.
Correct. And really understand, based on my income, this is how much I should really be spending towards certain things. And really understanding that, okay, let's say if I want to acquire a home at age 30, I may be one of the individuals who have that propensity to save. I don't need anybody to prompt me. And it's done religiously. We're seeing the entries coming into your shares. It's building. It's nice. So the conversation is different.
Right.
I may have that person who's adverse to that, and I now have to try to help you save. And there are 3 facilities. So if we sit and we analyze a budget and we say, I can set aside $1,500, but by week 2, that 1,500 is absorbed in Lyman, and I'm going to go out with friends, and somebody's going to call me to go on the beach, and I'm going to go with them. So you really want to understand that I can't help you save that $1,500 at source deduction. So as it comes in, it comes out, and it goes towards servicing the loan. If you do a trip facility, we allocate a portion towards shares. There are benefits of having shares with Eastern Credit Union.
Let's talk about that. Let's jump into that. And yes, I know this sounds like a free plug to Eastern Credit Union, but it's general to all credit unions. I just wanted to add that so that people can put stuff into context.
Right. So the benefit of being a member in any credit union is that you are part owner of the organization. It's the equivalent of if I go to a financial institution and I own shares. So I can have an account with a bank, but I may not be part owner of that bank because I don't have shares.
Correct.
With a credit union, once you have shares, you are part owner. You are involved in the process where you're invited to the AGMs.
AGMs are essential. Yeah.
You are invited. And we have a wide suite of products. Interest rates are on the reducing balance. Benefit as we make lump sum payments to principal. Interest is reduced. Term of the facilities are reduced. There's a monthly rebate on interest payments based on whatever is the interest rate associated with your loan, and it's tied to the performance of the organization as well. There are also a lot of nice to haves outside of the financial construct in terms of where credit unions really look at our members and adding value to the members. You would find at Eastern Credit Union we have EPL, we have La Jolla, and I think the pool in La Jolla is a landmark for everybody up in the East. I think everybody
learned to
swim.
As an adult, I learned to swim first at the YMCA, but when I realized I needed to just refine, and of course, because I used to live in Santa Cruz, I believe in recreational swim time, and unfortunately I don't own
In La Jolla, pool and gym are two staples within the East Coast corridor.
And you don't, and people, it's a landmark. La Jolla is a landmark.
La Jolla is a landmark.
Yeah.
So for instance, I'm from Princeton. So when I first came to La Jolla, and you ask anybody, oh, by the pool, and that is how everybody associates.
Okay. So Damian, let me take advantage again of your years of experience. What is the most important piece of advice you would say to a Trinidadian? Now, we are accustomed doing the easy advice, when you now start to work, put aside your money. Okay, fine, but let me be real. I don't think a lot of people, are natural savers. So let's say you're 35, you've been working for a while, you live your life, you have a bit of a time. You ain't done living yet because, we could live forever in Trinidad and Tobago and party.
Party don't done.
Party, it cannot done, right? What is the best piece of advice you can say to the average Trinidadian who,
For the average Trinidadian, we really have to understand that there must be some financial goal or some goal, even if it's not a financial part of it that you would have associated with that goal yet, but we must have some goal. So even at 35, I probably would have envisioned that I at least have my home by 40, children into my 40s, transitioning into probably when I retire, they are all big, finish university, and I've just seen about my grandchildren. So we now have to really sit and look at where we are in relation to that goal and find out what do I need to do financially to help realize on that goal. And we would find that the younger or a younger individual actually sitting down to do that level of introspect may have it a bit easier because they have more years ahead of them in terms of more working years, more income earning years.
But are there advantages to being an older person getting into savings?
I would say yes.
Why?
Experience is the best teacher. A younger person doing something because Darren told me to save. I will do it, but then I don't really know. If I don't save, what's going to happen? Now here I am, 35 years, and I didn't save. I know fully well what are the implications now, so I know why I really need to save. That is my life lesson. This is what life up to age 35 has taught me. So I know this is a change that I need to really have now. And I think we've moved away a lot from the conventional. I work, I have a salary, and I save. Now we have where I work, I have a sideline, I have a side hustle. Are we now working for that side hustle to become the main hustle? It's a passion. I really love doing this, and it's probably going to take over. I could transition from work to this, and I could really see myself living from this line of income. I mean, have a lot more than probably even 20, 35 years ago, having a conversation with somebody. You work, and you have to save 10%. And if you don't save 10%, this is what's going to happen. You have so much more people now really put a lot of vested interest into a side hustle, passive income streams, so much different things. So we really want to make sure that your investments work for you, or if you don't have investments, that you really get involved in making the right investments, given the timeline that you actually have now to realize on these goals.
Does Eastern have facilities for like business accounts? So if I have a small business, should I consider the credit union as opposed to the bank?
And the credit union is really founded on that. You'll find, like, if you go back to the credit union philosophy, the small individuals who probably go work in the market, laborers, and they have children to send to school, they usually go to the credit union.
Yeah.
So it's actually part of why we are in existence.
Okay.
So at Eastern Credit Union, we encourage the young entrepreneurs. We started off with the business center, which would have been recently renamed to the micro, small, medium enterprise.
Correct.
So what we offer is like a business incubator type of service to
Okay.
help you really understand the business, for us to understand your business as well too, and help take it to the next level.
Okay, so we mentioned this in the intro, and I just wanted to get this piece of, snippet of information out. I have the cash. Should I still take out a loan? I have the cash.
Yeah, especially I'm about to do a renovation. And, okay, I know what I want to do.
Yeah.
We hired an interior designer, we hired an architect. We have all the different figures.
And money is no problem.
I think, well, I mean, I'm thinking of it on two sides. So maybe I have the cash, yes. I don't have the cash for everything. So I realized we need stages. We need to do our work in stages. What is the benefit? What is the benefit of using that cash that I had on hand, or going to take a loan to do my renovation? What are the benefits?
Right, so now you're gonna have the takers who will prefer cash is king, and I prefer to hold my cash and I'm gonna borrow. Then you're gonna have the flip side, and somebody's gonna say, I have cash, why borrow?
Yeah.
So you really want to get
right. I'm paying back more.
correct, because now you're gonna look at the interest rate.
Yeah.
The interest component.
Yeah.
You're gonna have to look at the charges, which I always speak to my members, customers. Ensure that you have a full grasp of the charges that you're paying when you're making a financial decision, and do your comparisons. So you really want to understand how much you're actually paying for the service. And then you have individuals with cash who may not actually want to subscribe to a loan and prefer to use the cash. It's really understanding, one, how much cash you really have. Understanding that what I've outlined, we have the cost of the spend, we know exactly what we want to do. Now, part of the deep dive we do at Eastern Credit Union and really understanding your finances is really going through your budget and understanding how much does it take for, let's say, to run Darren's household, groceries, expenses, things like that. Then we have to throw in a little curveball inside. And I think the pandemic would have taught everybody this. What happens if Darren loses his job?
Yeah, boy.
Or Darren loses that contract
Yeah.
that he was really bargaining on to help pay for all of this. So now we're in a position where Darren would have utilized his cash, done this massive, extensive man cave that he really wanted, and he loves it. But now the flip side is his basic living necessities are compromised. He may have other debts, car payments. If it is he has children to send to school, we have to balance these things. And ideally, when you're working out a proper financial plan, you want to make sure you have at least 3 to 6 months of cover, so that in the event something should happen, I have adequate reserves.
Yeah.
And for the individual who has that cover and probably a little more, and they probably prefer not to borrow, no problem. But then there's the option for the individuals, probably like myself, who don't have the cash to actually spend on that man cave. There are other benefits, like we could capitalize on the equity on our property. We want to make sure, yes, we have the property, it's the biggest asset we might ever own in our lifetime. How is this asset working for me? This asset could work for you because I could get a more manageable interest rate, I could get a longer term, I could term it out longer, more manageable installment. I could even benefit by completing that man cave, taking some excess cash out of that equity and investing it, because I realized there was a gap in my portfolio where I don't have a lot of liquid cash. And I could now say, here's what I'm going to take, this 100,000, and I'm going to put it in some shares in Eastern Credit Union. I'm going to put it in a Jade account. If you probably want to go outside and want to probably go and invest in some mutual funds, probably want to get in a different type of investment. These are some of the opportunities we can explore.
Well, Damian, one question. What is equity? Because I keep seeing that everywhere. And as I said, I'm not a financial wizard. I'm a designer, right? And I mean, there are financial components to interior design and my administrative side. And then, so before clients can get to me, they have to understand, wait, hold on. So can I afford this? Can I access this cash, etc.? And I heard somebody talk about equity. What is equity when you start talking about that?
So equity, very simple. We need to understand what is the value of our property.
Right.
Okay.
Right.
Like the existing property that you have.
Existing property that you have, correct. So,
before renovations and these
correct.
things, right?
So equity means I must own this property.
Okay.
Right. So if I have a property, let's say I'm going to use a value of $1 million, and I now probably owe a financial institution $500,000. The difference of that is really the equity. Now the other factor that we have to take into consideration, dependent on the financial institution that you're dealing with and their policies and guidelines, we have to take into consideration the level of financing that they are prepared to give. So if you enter into a financial institution and they're only prepared to do 90% financing, what is going to happen is, you know, have $1 million, 90% of that is going to be $900,000, so that's the maximum that they would be prepared to lend you based on the value of $1 million. There may be other factors that they take into consideration in terms which we were discussing in terms of age, how long we could run the facility, but in terms of basic terms, it's $900,000. We now have to minus that $500,000 that's currently owed on the property. So in that particular scenario, I now have $400,000 of equity to benefit from.
Okay.
Yeah.
So do I have to pay that back?
Right.
I
So
do.
yeah. So it's actually monies that you're borrowing based against the value of your property.
Okay.
Yeah.
So essentially, I already paid $1 million. So I'm adding another 400,000 to it. And interest and everything.
Right. So in this particular scenario, we borrowed $1 million to buy this property. 10 years down the road now, the balance would have reduced.
Right.
And now we owe 500,000. The lovely thing about equity is that it's not static. It's not that it's only going to be worth $1 million. Because Darren put his personal touch on it and his flair, and because of demand for property in the area and just the sheer location, over the years the value would have probably increased to $1.5–2 million, depending on the other factors. Economic factors are also taken into consideration because we have to look at market conditions, employment levels, things like that. So we want to ensure that in this scenario, 15 years down the road, property is now worth 1.5. There's additional equity value on the property that Darren could capitalize on. If you sell the property, you sell it for 1.5, you pay off, your net effect is $1 million.
Right.
But it also means that you can borrow based on the value of 1.5 if it is you don't want to dispose of the property.
So no longer the 1 million, it is.
Yeah. So what you have to understand is that you are increasing your borrowings. Right. So you're adding on to the 500 that you owe, but it's just secured by the increased value of your property.
Okay.
So there's no unexposed portion.
Okay.
Interesting. I think that was pretty simple for the layman. I mean, for me. So I could have that understanding now and understand. I mean, similar to that, like I've had quite a few friends when they talk about it, that servicing ratio. So like, you are in jeopardy because your debt servicing ratio is up, it's too high.
It's high.
And why is it too high? Matter of fact, what is your debt servicing ratio?
Yeah.
So we would have touched on it a bit when Darren indicated that he starts to live.
Yeah.
And then we said that we didn't want this mundane life that you go to work and we go home. There are other things.
You need to have work-life balance.
Correct. So what we look at
We
our
have more
financial
balance
institutions.
and we have more unbalanced
And balance
yes.
now.
That is the problem.
So all financial institutions, there's a standard that they use. On an average, you're looking at between 30 to 40%. And what that means is that your loan payment in relation to your gross salary. The other portion is really for living and living expenses, and I'm going out and I'm socializing and doing all these other things. So there is an allowance for it. But we want to make sure that that monthly installment for credit facilities is not too onerous on you,
Okay.
that I can't live. The higher the ratio, the higher the risk it carries, because I am now in a position where I could probably hardly do basic things because I'm paying the financial institution so much.
Okay.
Another thing you have to appreciate with your debt service ratio, it really ties into, I guess, your buying power. Somebody working for $5,000 could buy just $5,000 as opposed to somebody working for $50,000. So in certain circumstances, you may find the bank's policy or financial institution's policy may cover for someone working, let's say $5,000 or $10,000, we may go with a max debt service ratio of 40%. So in this instance, we will only take $4,000 per month from your income if you're working for $10,000.
Right.
Now we have this person working for $50,000. But because their salary is, the salary that you were expressing before, we may probably want to go to probably $45,000, $50,000 because the residual amount is still sufficient to cover your living expenses. And it's really understanding and appreciating that space that we reside in for the individuals working for 10 and then the individuals working for 50.
Well, I guess we can say in theory that's a comfortable space, like dependent, because a lot of people would say, right, if you take 50, I can't survive on 15,000. I can't survive on 20,000. I mean, I guess that's an individual case.
It's an individual because someone without children and probably just going through life on a normal, it's probably easier. And then for someone 2-3 kids and you're adding up expenses, school transport.
Once you have a
books,
complication,
correct.
it gets and it's it's honest, because once you have a minor complication in Trinidad, it gets really expensive
sticky,
really quick.
Quickly.
And I think that's one of the things why this conversation is so important, because you need a lot of help with financing. You need education, and we need to be realistic. Life in Trinidad can get expensive really, really quick. Once it's not going along to plan, it gets very expensive.
And even if it's going along to plan, I am sure you will notice what you spent in the grocery last year.
Oh, yeah.
Oh my God.
Last week.
Exactly. It's different from how much you're probably going to spend today.
Yeah.
So think about it. I'm working for $10,000. $4,000, which is constant and it's fixed, comes out. There are statutory deductions, there's tax and IS that I have to take into consideration. I don't really have much surplus to cater for the increase. So I now have to try to pivot with the difference that I have, and I have to balance accordingly and may have to cut certain things to cater for certain expenses as well.
Yeah, boy. This is a lot. So, Damian, like I said, I wanna, in short, what is the best piece of advice that you can give to the Trinidadian?
I would say be true to yourself. Understand, and this is outside of the financial construct in terms of what we could offer you. Really understand what you want and what you need to do to get to that particular position. The advice is out there, the information is out there. It's very easy to get it. But
You see that, right? It is not.
It is. It's
I
very
have you
easy.
here, so you being nice, have a lovely setup. So I'm like, Damian, I don't know what equity is.
So I'm guessing that Damian is saying it's easy to access. And we are thinking it's not.
Yes.
From experience.
Yeah.
We have learned that it isn't. So I guess there's a gap between
what's out
there
and how it's reaching the audience.
Right. And that is the type of feedback we appreciate.
Right.
Because it means we need to tweak it a bit.
Yeah.
It means that there's an expectation gap that I presume you actually
Right.
understand that
Yeah,
it is at
yeah.
your fingertips. And then the reality is that this information is so hard to get. So that is a takeaway for me to actually go back and probably just look at our processes and how we disseminate information and work on it.
Yeah, thank you
Yeah,
for saying
thank
that,
you
because
very
I think
much.
one of the things that, my degree is in PR, which is really about communication. And I think one of the biggest problems that we have in Trinidad is communicating properly. We think the information is out there and accessible, or because we've spent so much time producing it, that the audience will come. The audience won't come because they don't know it's there. And it hasn't been done in a way that is easily accessible or even palatable when it has been produced.
Because I think the way Damian expressed everything here today so far is palatable.
Yeah.
It is.
Yeah, and because it's conversational, it's almost
Yeah.
like if we're having a personal loan financial conversation.
correct.
I guess much in the style like what you would do. So people who've been through it are like, but you had to set up an appointment with the credit union to get this kind
I
of
now have to
conversation.
have my own personal introspection
Yeah.
to understand, okay, what are my goals here? Because to me, I was just going to rent for as long as I could. Because I made a decision that I am not going to purchase a property unless I purchase an income generating property.
I was just about to say that.
So I am on that property as well, and I become a landlord just like that.
Yeah.
But when I see the amount, because I mean, doing this every day, interior design and purchasing and doing these different things, everything is expensive. And then one day, the fridge goes, the microwave goes, the stove goes.
Yeah, come on, me have no water.
Correct. And it's like, okay, I need to deal with this as a homeowner. You now move into your house, there's a leak. The roof, somebody missed some water spot, your roof caved in. You now moved in there. Understand? So like to me, I was like, nope, the only place I'm purchasing is an income generating property.
Yeah.
And I mean, I have walked that plank of wondering, maybe should I get something, maybe should I think about it. But as you rightly said, we have to think about what we want, what are our goals. I mean, generally in life, understanding our goals with design, with renovation, with wanting a home, with buying a car, with every single thing, understanding your goals is a major deal.
Yeah.
Right.
And with finances is even more major because we have a tendency here of just, as you rightly said, just spending money like we have a tree in the backyard. And we don't consider this, purchasing a home, renovating. And as Damian was alluding to earlier, people are going out there, you're meeting your partner, and your life in a mess. You have no home to bring this partner to.
So true.
So,
Life comes at you fast.
what you doing? You understand? And then all of a sudden, at let's say 37, bam, I need a house.
37 creeps up on you very fast.
37 is coming to me in 12 hours.
Well, I would not even call my age.
But it's like, so did I live? Am I on the right path? You know, those are the questions a lot of us have to start asking ourselves. Like, and if we're not fortunate enough to get like those government subsidy homes, what is happening? Are we gonna live by mom and dad? Yeah. Are we gonna live by mom and dad or?
Listen, I'm
Just
so
rent.
grateful we live in the Caribbean and we don't have that stigma against living with your parents because it's really not realistic
Yeah.
to
I lived with
everyone
my
being
parents
able
for
to-
35 years.
Yeah. It's not
And-
realistic for everybody to move out at 18. You just
It's
don't have
not.
you don't have the space and that's just not
Yeah,
our
that's
reality.
Yeah.
You know, you have to be very financially blessed. You know, so
So Damian, now we're gonna have the tea bag. The tea bag is where we ask a question from a listener.
yes.
So Soini has that question for you.
Yes, so we have a question from our listener, Kimmy, and Kimmy wants to know, and I feel like we kind of touched on this before. All right, so I am 44, I'm single. I mean, can I afford to purchase a house, or do I have to have this, you know, am I doomed to living with my parents forever?
Did Kimmy say what her salary is?
Kimmy did not say what her salary is,
Kimmy left
but,
me down with the salary. But Kimmy can't be a homeowner.
Really though?
Yeah.
I know you keep saying that, and you said you could get a mortgage at 50 and it's very dependent on you, but I wonder how many people are really making like 30, 35, 40,000.
Now, part of the discussion we will have with Kimmy is one, we really need to get a little more information and really understand Kimmy's full position. She's living with her parents. What's her income? First question. What are her expenses? What are her goals? We have to step back a bit. When Kimmy was 25, at what point did she really realize that probably it's not going according to plan? Am I supposed to be a homeowner at this particular time? Not sure. And I say step back so that Kimmy could really understand and conceptualize that we started to drift off course, and I may need to take a certain course of action to get back on course. And sometimes, as we would have been indicated in previously, we may have to look within if it is the income is not at a particular level to help, bridge that gap. Give me the opportunity to earn a higher salary And it's not just a salary, it's so much other things Kimmy could get involved in to earn an additional income. I don't know if Kimmy has a significant other that you could probably factor into the equation, and it's now joint home ownership.
Yeah.
So, these are some of the questions we want, and the conversation we'll have with Kimmy as well too.
So like a question just popping out of that, like, is there a it is too late moment ever for like even Kimmy or for anybody else? So like she wants to buy this house at 44, as you said. I mean, as you keep saying, yes, you can get it, yes, you can get it, but is it too late to switch your mind to that?
Yeah, there are moments when it's too late. Now, when anybody comes in for a conversation, a financial conversation, we want to hear the bells and whistles and say, yes, I can do this.
Yeah.
But we also have to understand that there may be certain things I just cannot do based on my life stage. And for instance, somebody 55 years working for $10,000 who wants a property for $2 million, that's not something that you could conjure up and grant, and you don't want to create any false expectation.
Yeah.
So, we really have to understand where we are positioned and really taking that information in the best interest. And probably we may need to, take that dream and probably just reposition it a bit.
What I like about everything that you say is I'm like, no, Damian, tell me ABC. And you're like, no, we need to start with you.
Yeah.
What do you want?
Yeah.
Not just your finances. So not just how much you have in the bank, how much you're earning, but also what do you want? What is your spending, saving history?
Correct.
And part of our discussion really needs to deal with that. And I like the consistency. I mean, the Virgo part of me does not like that because I want rules. But the adult part of me is also, which is also partially the Virgo part of me, is like, okay, but realistically, you might say the rules are ABC, but if your personality type is of a particular, if your actual patterns, the reality that you've lived in your 20s, 30s, 40s suggests that you treat finances in a particular way. We have to factor those into our genuine conversation.
Correct.
Wow. Damian, we have this section now called What's Brewing, and this is where we ask you your favorite design trends.
I guess.
I mean, we are going to throw you. No, we're going to throw him into the fire here.
We're going to throw him in the deep end.
Yeah.
Yeah.
Like when you look at a space, when you go out, when you think of anything, let's say you have that man cave you want to do, and you come to me and you say, Darren, I like this or I don't like this. What comes to mind? Like, what are your trends that you see?
I like more minimalist living. So I wouldn't want too much clutter and too much things in that space.
This is after living in the Caribbean with parents for a long time.
Yeah.
Yes, parents, I'm sorry. I'm not throwing you under the bus, but we know you like to clutter and hoard. But coming from that kind of...
I prefer that minimalistic lifestyle. It's really pieces that add value, and it's not too much clutter that you actually...
So like art, I mean, a lot of us don't know that art is an investment. Do you like art? And
Yeah, you must have some tasteful pieces, but it has to bring like a kind of zen feeling. This is a getaway, so it has to bring that
But does your minimalism include color, or are you like white, monochromatic, or do you like color?
I prefer white, probably into shades of grey. Yeah, that is my style.
so you have a clean house.
Yeah.
My last name approves.
Right, I like that because minimalism, it's sort of individualistic.
Correct.
So it depends on how minimal this person is,
Yeah.
or how or let's say
Maximalism.
whatever that word is,
Aristotle.
And it's like, so I like that. I like that you have said that because I mean, a lot of guys now are walking that trend of minimalism. Because I mean, even with myself, I have chopped down many things.
Yeah.
Like,
You would tell me you can travel with a carry-on, and I'm confused.
yeah, I mean, I've learned to do it. So even with that, even with
If you say
moving,
for a weekend,
we
my
have learned
brain
how
understands that.
We've
but
learned how to even pack our lives into 2 suitcases.
Yeah.
That's what I have learned to do. And my space is just minimal.
yeah, that's
Very
not.
so-
I haven't reached that level. Don't know if I want to. I'm just saying I have not. So no tea, no shade. A list of your design notes.
Well,
That's what we want to
let's
make this
say
financial
financial.
because we throw you in the deep end,
Yeah.
and you were lovely. You were able to rise to that. You didn't sink.
Okay.
You didn't sink. we like it. We love. So a list of your financial no-nos and how to fix the worst financial disaster that comes to your mind.
Avoid impulse buying.
Okay, we don't like Damian anymore.
Oh,
Goodbye.
yeah.
Goodbye.
Yeah.
Goodbye.
I mean, we've all heard it.
No,
but
goodbye. No, I'm not. This conversation's over. Thank you,
mean,
Damian, for joining the podcast. Why are you encouraging
For the
him?
last 2 years, right? Impulse buying is what kept us sane.
I know what to
Do we get to
say.
ease up because of that, or are we still,
Some of my best fashion choices.
You understand?
Well, okay, they're not impulsive.
or
that's
are we
not the
still going
point.
to be buffed and chastised for going and buy the whole of Amazon? You know?
No. Now, there are the impulse buyers who have cash.
Okay.
So they probably based on salary and other factors, they could afford to spend. Now you have impulse buyers who use credit cards. And
Yes.
now the impulse buyers who use credit cards now have an interest rate of in excess of 24-25%
Right.
over extended term to pay for. Let's say we bought this teacup and the lifespan of this teacup is 1 month, but I now have 24 months to pay for this teacup that I bought that just had a lifespan of 1 month.
Wow.
Yeah. Okay. So I'm
Wow.
gonna look at my credit card bill.
Yeah.
All right. So we like Damian again
Yeah.
because that yucky reality.
It
needed
brings
to
us
be
back to
told.
reality. Like,
Yeah.
it really does.
And he didn't do it in like a judgy way.
Yeah. It was a very
So we
kind-
like,
Yeah, okay.
but it still stinks.
Yeah.
It still stinks.
So basically what we do is, am I gonna buy this top on hire purchase for 24 months? Because basically that's kind of what it is. I'm gonna pay 24 months for this item unless I have the capacity to clear it off. And even if I have the capacity to clear it off, I am now foregoing something else because I
Right.
could have invested that money into saving or an investment or something else
Right.
other than just this stuff. And do I really need it? Because you probably have about 12 of the same thing in a different color.
No, I don't.
to bring it back to design in a sort of way, I guess we can look at the same with purchasing that sofa or purchasing that refrigerator.
Yeah.
Because I mean, a regular standard refrigerator services the single person. Do we need that double door? Do we need that French door, but ridiculously large refrigerator? And I mean, a lot of us will say yes, we do. But is that? I mean, I guess we can look at that in that way because we're going to be paying off this refrigerator, and I guess this is also a depreciating asset.
Correct.
So
But you notice when you impulse buy, everything else that takes priority automatically feeds into the background.
oh, for sure.
You forget the car needed service.
You forget to pay your phone bill.
Yeah.
Some people forgo rent. Mind you, I feel you have to live on the chair or in the fridge because the priorities are sent to the back.
Yeah.
And all right, impulse buying. I feel like this will attack everybody listening.
So, Damian,
We
it's
thank
been
you.
lovely having you
It
on
was
the
really
show.
lovely
Yeah,
being here.
Because
definitely. And we're also recording in the Aquaterra, one of EPL properties, and I would say Eastern Credit Union. Well, EPL is a subsidiary of Eastern Credit Union.
Correct.
So it's one of the units that was
Designed
by DGB Concepts, for their Airbnb purposes, and I mean it's still in good shape.
yeah, and it's one of the benefits of being a member of Eastern Credit Union. I mean, it is available on Airbnb.
On Airbnb.
And if you come in, you're going to see, especially in this particular suite, Aquaterra, you're going to see art from one of our earlier guests on the program,
Yes,
Kevin Garcia.
Kevin Garcia.
So we're sitting right next to a gorgeous Hui painting. I'm guessing that's oil, an oil painting.
I have
so
no clue.
listen, this has been a fantastic conversation in the most exquisite little apartment, and Damian, this has been a pleasure. I feel like season 2 we're gonna have to have you back on because
Because we will definitely get
I
a lot
don't
of
even
feedback.
think you have options
Yeah.
anymore. Like we're gonna be like,
Because I'm sure
Damian,
people will have a
here.
lot of questions. They will
Yeah.
have a lot of follow-up questions, and I think you came in at the right time.
Yes.
Because I'm sure a lot of us are pivoting. Oh God, I hate that word now. But
we can overuse it, but
we overuse it. But a lot of us are pivoting into, okay, I need to make better financial decisions.
Correct.
And let's bring it back to our renovation and our mortgage and buying a home. So yeah, this was pretty decent.
Thank
So
you.
Damian, we thank you so very much. Usually we ask where you can be found, but Damian can be found at Eastern Credit Union when you want to get that loan. Please come see them. All right.
You can listen to the Interior Podcast on Apple Podcasts,
Spotify,
SoundCloud.
and all other streaming platforms.
You can follow us on social media on Instagram.
Yes, and even Facebook at The Interior Podcast.
Go ahead and follow us now.
Thank you.